morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream is about integrating Bookmap order flow tools with auction market theory using the volume profiles, a chassis in the intraday developing time frame. It's based on structured trades. Welcome to the Traders Lab. I'm your host, One moment. Thanks for visiting us. I stream. This is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. The idea of Trader Lab is to help developing traders understand the business they're in. This business is not really a video game. It is really a business based on statistical probabilities. So we focus in the Trader Lab on helping traders differentiate between the fantasy and the reality of the business, and also using processes to help develop a trade plan, vet statistical edges, only get involved in the market when that vetted edge shows up, and deal with the psychological issues of operating in a completely random environment. This is not a business of predictability or being right. That is a psychological need. It is not a performance-based business in the sense of getting approval. It is just a business of probabilities. And the outcome of any individual interaction with the other participants is 100% random 100% of the time. The differentiator is if you only interact with the other participants subject to a vetted trade plan over a random distribution of outcomes, you have the opportunity to extract dollars from the other side of the table. And just like casinos, who are the business model, you're going to also pay the gamblers. And what is that? How about overhead and cost of production? How do you experience that? Is this about being right? There is no right in the sense of gambling. The right comes from following a plan that gives you a statistical edge. Anytime you're not following our plan, or if you don't have a plan, or you're making it up as the market develops, when you're subject to emotional triggers, you are putting yourself in a position to potentially not sustain yourself. If that's been your experience, which is all of our experiences, because we've all walked in the same shoes, then you might not have a process that will sustain you. And then statistically, as you know, the failure rate for developing retail traders is very high, and ask yourself why. So if you keep working hard, thinking that you can predict the outcome of any individual interaction, or you can squeeze risk out, you really can't. And if that's you and you keep working hard and waking up in the same place, it may have nothing to do with your intention. It may have to do with your process. You cannot fix a defective process. You can only continue waking up in the same place. In fact, I coined a phrase for myself years ago called Trader Groundhog Day. Work hard, tweak it, curve fit it, optimize it, same outcome. What can I tell you? Is that you? Then use the link in the bottom of YouTube, visit the Trader Lab. It might help you on your journey. And as we always have to say, general disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper, give you a couple notes, a couple probabilities, statistics, and the rest of it. I'm also going to give you an overview of the intermediate time frame. You already know the higher time frame so far is still up, and we'll talk about market mechanics and structured trades that I've shared in the Trader Lab. The thing you need to understand about this, it isn't what I do or any other trader does. It's what you do. And how do you figure out what you should do? That's where the trade plan and the probabilities come into place. And also customizing it to your psychology, which is a very big element. That's why you can't come to any chat room or a streamer and replicate what they do. What I do is not what you will do, but the processes I use can be the same for you. You just adjust it. And that has to do with time frame, as you guys think of it. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. What that says, you have to vet everything for yourself in proof of concept. Nothing you hear, see, or anywhere means that it'll work for you, or if it even is valid. That's why you have to roll your sleeves up and commit to proving a process. If you prove it to yourself, does that help you manage your fear? Because we're all fearful. Why? Because it's always uncertain. Our primal wiring suggests, no, don't do that. Let's wait and be sure. Well, how's that working out? Now, calling all trading companions. I'm kind of find this kind of amusing, and the reason it's amusing, and it all started, I think, because one trader, Bookmap has these contests from time to time where traders can win free Bookmap. And this one is for, I believe it's a month of Global Plus. That's the whole enchilada, not including, of course, advanced add-ons. And this trader submitted, his dog was sitting in his chair in front of his workstation, like pushing the mouse. So it was kind of amusing. I mean, it was kind of endearing if you care about pets. So, dogs, cats, I don't know about having a python or, your pet scorpion, but, submit it, post it, use the hashtag Bookmap Pets. It's for this month. Submit it and to Instagram, X, or even on LinkedIn. That's all you got to do, and you'll be in the competition. And I think getting free Bookmap, especially the Global Plus, is a goodie. So be advised, be aware, and let's not miss out. As my mother used to say, free is good. This is the higher time frame. Now let's talk about that. What I refer to as higher time frame may not be your higher time frame. But as a day trader, I'm trading inside of this structure. If we want to talk higher time frame, we're in a bull market. So until that changes, that's where we are. Now, as day traders, we are trading inside this, and let's call this a intermediate time frame. And basically, now this is a volume profile. Now, the volume profile, all it is price and volume, so it's not complicated. But it does look a bit strange compared to those of you who use your standard plug-and-play indicators. And we've all used them, and I'm not saying you can't. What I am going to suggest, though, is the nature of retail trader behavior is to believe, I'm using the terms very quickly, believe that more is better. Why would we want more? More certainty, of course, more profits, less losses. But what is the real issue? Certainty. If I have more indicators, I have more certainty. Here's the problem, in my opinion, at least from my experience. My experience is over 46 years, and I've done the same things. And it's not a badge of honor. It's more of a badge of bruising, and a badge of not understanding the business and trying to fit the business into my psychological needs. And that was to be right, to avoid losses, of course, right? However, the belief, and this is the key word, the belief that more gives you more of the things you're seeking. What about if more creates less? More creates less consistency, potentially no way to measure the inputs that actually create a statistical edge. And even though we all have random winners, which anybody can, even if you have a random buy-sell generator, it doesn't mean you have sustainability. So what I found, and I'm only talking about me, was I had to strip everything out and go down to the basic essentials. Because if I can't have a structured or anchored input, same as the casinos that have structured games, then I'm the gambler. I'm not the house. And I think, based on how casinos operate, and they do pay the gamblers and give you the cocktails and the ticket to the buffet, it's better to sit with the house versus sit with the gamblers. What do you think? And all gamblers get paid, and all gamblers have winning hands. So that's something to think about. Now, intermediate time frame. Swing low, swing high, sweet cherry up. This is the low over here. Now, what's important is, day before, this is yesterday's RTH, day before yesterday, we did the Acapulco cliff dive. Now remember, this all started up here. We had this down day. This was last Friday. This is, right, we had the holiday, that's what it was. So this is Tuesday's RTH. Blew everybody out. And look what happens with the market. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market gaps higher to go up. The market goes up to go down. The market goes down to go up. The reason this is green is we had selling, and then those shorts became buyers. What's happening today? The shorts up here are on the hip parade. Why? The market goes up to go down. The market goes down to go up. Now, of course, part of the thrill is when, where, how, right? But it's important to understand market mechanics. The other part of this is this happens in all time frames or fractals, or however you want to define it. So now let's look at some key levels. If you remember yesterday, it was longs. This is yesterday's RTH. And the low, this was our primary target for short, 64.2675. And this is all in yesterday's stream if you want to take a look at it. Coming down here is reversion. This is called mean reversion. It's the primary trade I discuss for developing traders in the Trader Lab, because the market is always testing prices. You guys think of it as support and resistance. Well, if you think of how the market, what it is actually, it's not a line on a chart. It's really volume based. It's shopping. So if you know how to shop, you have the foundation of how to trade. The difference is if a price becomes too low and the shoppers return to it and the sellers go, you know what? We're not going to sell you any more of these. Then you're going to have to pay a higher price. If this was the fairest price in this day, 26.75, and we close higher, and the new retail price is around 64.50, then this is the price. Too low, we checked it. Now this is the price. Yesterday's objectives, besides the longs, and you could trade shorts or either side, was 70. That was our target for this day. Didn't get there, okay? But now, because if we get in here, then what we're doing is we're returning to the highest volume for this whole period. This is the retail price in an intermediate time frame. You'll notice in different fractals or time frames, the market is checking prices. So if this is too low, what about this? I don't know. We'll find out. This is now retail in the next time frame up. So what is happening here? Let's go back to the concept. What does the market do? It's a shopping environment. What's too high? What's too low? What's fair? Well, is that too low? Well, it was fair today, but yesterday it turned out it's no longer fair. We check it. Nah, you can't buy it there. This is the new fair price. What was fair in a higher time frame? Up here. So the logic is if we find too low and this is fair right now, then we can come here, we can come here. And if we get through all of this, where's the stops? Remember, the market goes up to go down, goes down to go up. Where's the fuel? Out here. Are we going to get there? Not my job. That's how we start. Now, this is before the market opens. This is what goes into a trade plan. Observing the participant behavior. No indicators. Now, I don't use indicators. Doesn't mean you can't. I have no opinion other than what I know for me. And for me is, if I have random inputs, I get garbage. So the only way I can hold myself accountable is only trading with an edge. Doesn't matter how you get it, but do you actually have one? Now, so we are opening. Okay. Out of balance, higher. Make sure I got yesterday's high. Yeah, okay. So higher outside of range. So yesterday's high, RTH open, so barely outside of range, out of value. This suggests there is a potential long bias. However, part of the thrill is the ETH low is above yesterday's fair price. Now, at the time, of course, who knows any of this, right? We are above the value area high. So this suggests a market that's slightly out of balance. Now, what that suggests is a long lean. And part of the thrill of trading is, of course, now what? Now, let me remember, we have 70, we have our ETH high. Let's go down to statistics. Past performance, not indicative of future results. You just got to do your thing. Higher outside of range, right? There's a 79% probability we might get to the ETH high. Checking the previous high, 67% probability. Not too high to fathom. And what about yesterday's low? Do you think that's high on the hit parade? Maybe not. The first hour's high, 62% probability. That's called the IB high. So I have a high probability of ETH high probability of first hour's high. The previous value area high, approximately a 55% probability. The ETH low, 38% probability. The previous point of control, a 38% probability. Now, what does that mean to you? It means we certainly have a skew to the upside. So this is before the market even opens. This is after. So this is pre-RTH. If you're in Trader Lab, you'd have this information. It's in the library. There's a library of webinars, and all these statistics and everything else are available. Now, of course, you have to vet everything. Now, I'm spending this time, and you're going to say, show me trades, right? Guess what? There are no trades unless you have this component or these pieces already in place. The other thing is, when we come to market, we're not making it up. This is not a video game. I mean, it can be, but then that's a game. And if you're playing a game, you're not going to be here. That's up to you. I'm not saying you shouldn't do it. I'm just saying is this stream is really for those who are interested in sustainability and creating a career path. Doesn't mean you'll be successful, because you're going to be challenged beyond anything you've ever imagined. And the reason for the challenge is not that you can't learn to trade. I believe anyone who comes to Trader Lab can learn how to trade. The challenge is going to be overcoming your primal wiring, which is fight and flight, looking for certainty, looking to avoid risk. And the species has done really well avoiding apex predators, and your wiring does not perceive the difference between the risk of the uncertainty of the market and the risk, is there a saber-toothed tiger behind a rock? It doesn't know the difference. It is subconsciousness. It's unconscious. It's primal. It's in your DNA. It's just why, when we crawled out of the swamp, however you want to choose to perceive it, we're still here. So that element is always operating. It's not something that you can intellectually or consciously suppress. Instead, you have to become consciously aware of it and learn how to manage it. Tangible metrics are the path to controlling this lunatic, as I call it, and I refer to it as Hyde, who is under the hood. And if that's you, you keep doing things that are not in your best interest, it's really part of the issue. It's not something, it is something that you have to work on developing a solution for. And it's going to be the hardest part of this. Learning how to trade, in my opinion, is not hard. Being able to trade, that's a whole different conversation. So let's look. Overnight volume point of control. This is the retail price. Now remember the sequence. The naked volume point of control, or the retail price from yesterday, too low. The ETH low went down. No bueno. Didn't get down there. C'est la guerre. We have settlement here. We're above settlement. We have yesterday's value area high. This is where 70% of the volume took place below here. And this is called the balance or fair area. We are opening outside of it. We're opening above the overnight mid, and we're opening above the retail price. So the possibilities are we can check in here and move north. What else do we know about the market? The market is short. If the market is short, what might you get? Short covering. So if you're hanging out here from yesterday, and yesterday was a bullish close, a friendly close, then and you're still short from, remember what I showed you in a higher time frame from several days ago, from last Friday, then how you feeling about that? Feeling meaning emotional. Maybe not so good. So what are you going to do? Well, if you're short, you will cover. Or if you think the market's going to go down, who knows? You may stay with your short, and then you have to determine how you manage it. All that's specific to your time frame and trade plan. Now, let's go into the beginning. Now, I'm going to show you and discuss trades with you. None of these are plug and play. Doesn't exist. And I know our nature is to replicate or duplicate and look for plug and play. This is not like software. What works in one condition will not work. The same thing may show up, but if it's not the same condition, it's not qualified. In the trade plan, you would be able to, after vetting, differentiate the qualifications for specific trades. So what I do here in the streams, I'm just going to give you ideas. I'm going to talk about trades I take. None of them are recommendations. I'm also only going to give you really broad strokes. What I do is not material. But I've kind of ferreted out, I think, some trades that are simpler. Now, simple doesn't mean easy. They're less complex, okay? So that you can minimize the inputs so you can develop a proof of concept. Now, let's look at this. RTH open is here. I get some buyers, fine. Now, what I always tell developing traders is patience. The open is a separate trade plan. And what the problem is for us, first of all, when the market opens, there's a lot of volume running through, and we're triggered right away emotionally with FOMO. So right away, you don't want to miss it. You're already in a heightened state. Adrenaline is flowing. Your brain is saying, give me a dopamine fix. I want the approval. All this is being triggered under the hood. Now, if we know that, and you know it, is this a place for you to trade? Well, the only way you would know, and this is the last place to trade. I always say to developing traders, there's no reason to trade here. What are you doing? Why do you need to trade if you have the full session? There's no structure here. It's developing. The structures, the ETH, and the overlay of the intermediate time frame that I showed you at the top of the stream. So right here, I developed something, and I just came up with this, and it was many years ago. And early on, I learned market profile when it was first came out in the public space from Peter Stottlemyre, and this was in the mid 80s. And I was pretty smart back then. I was using trading systems and indicators. So I said, oh, this looks really interesting. Makes a lot of sense. It resonated with me. I was already using elements of it, but never had a complete understanding of, the auction and all of its aspects, but components. And before I actually developed this, I started using market profile with indicators. And needless to say, I had the same results. I didn't need a market profile to have random inputs and getting random outcomes. Didn't solve anything. It just added more fuel to the fire of randomness. So I had to get rid of all that. And what I did is, over time, and it was very hard, I eliminated indicators for me. Doesn't mean you can't use them, but when you have random inputs, you can't measure them. So that'll always keep you gambling. So however you anchor your inputs, just remember how casinos play games. They don't make them up. They just play them exactly the same way. And why is that? It's the only way they extract their edge. The gamblers play their cards randomly. Don't forget that. Casinos don't control that. What do they control? Only how they play the game. They don't change the number of cards. They don't change the inputs. You see what I'm saying? I'm just trying to make a point. But the point I want to make is that's the business model. It is successful for casinos. I don't believe you should be trying to reinvent the wheel and make this into a business you imagine it is. How about just following a proven business model, gaming, and adapt this to something we know that works? It might not work for you, but it does work because that's the business you're in. Just think of it that way. So what does this say? The volume starts out here. This is too high. This is the retail price from the ETH. Too high, too low. Let's look at this. I'm showing you a derivative, as I think of it, of support and resistance. What does it say? Language. This is your retail price. I'm not paying that. Let's go down. Where was it too low? Here. What was the probability of getting here? Back to your statistics very quickly. 81% probability. What do you think of that? Is that useful? So, too high, too low. If I get long, This is my resistance. Let's just follow the behavior. Watch the behavior. So, too high, too low. This is the first long. And then the target, we would start out with 70 and then the ETH high. This. And why would we go here? Well, we know about the ETH low. We know we're outside of value. And we're over yet right here. We just checked yesterday's high. This is kind of like a little kiss. No, we're out of here. And what do we know? Where's that overnight volume point of control? The last retail price from the last auction? Too low. Now let's take this a little step forward. So in the ETH, which is the last auction, this is the fair price. But why are we, what happened yesterday? I'm going to just bring you back. This is the highest volume for this whole day. Too low, low of the day. Let's extrapolate the concept. What about the ETH, the last auction? Too low. What does that do for us? Too high, too low. This sets up along here. This is a Trader Lab structured trade. Stop would be under here. Scale is here. Target would be here, there, and then ETH high. And what was the statistic? You wrote it down, almost 80% probability. This is called structured trading, okay? So that would be the first long, if that's vetted for you. I'm not saying it's a long, I'm just saying it's a trade in the Trader Lab. How would this work for you? Is everybody tracking so far? Structured trading. Yeah, hi, Charlie. How to join Trader Lab? There's a link in the bottom of YouTube. You can click it. There's no cost for Trader Lab. It's open to everybody. Doesn't matter how long you've been trading, what you do, you know. None of that matters. It's a community of like-minded traders who come together to leverage their collective experience. Everybody has something to add to the pot. The thing about Trader Lab, this is not a trade calling room. It is really mutual support. And we share ideas. But the important thing is that everything must be vetted. And anyone who comes to Trader Lab has to understand, because somebody posts something, it doesn't mean anything. You have to kind of find what resonates with you. And I'm going to say is we all are in such a hurry. That's FOMO. This is really where everybody should put the brakes on and just take a deep breath and say, okay, what I'm doing, if it's not working, other than random, outcomes, I got to stop what I'm doing because it doesn't work. What does work? Well, that's your journey. And you might find some of that in Trader Lab or maybe not. But how do you join Trader Lab? There's a link in the bottom of YouTube. You click it, and then you come to the Bookmap server. You're going to be asked to verify your Discord username. That keeps the spam and the riffraff out, right? And you won't be solicited. Nobody's going to, nothing happens here. But it keeps out the spam and the phishing and all the other stuff that, we enjoy in this modern electronic world. Then you come to Trader Lab. You'll see it. Now, Trader Lab, you'll see a little hashtag Trader Lab Tom B. I created Trader Lab because of what I went through. And unfortunately, nobody should take as long as I did. And the reason it was long for me was when I started, there were no off-floor traders. The other part was I reverse engineered all the new information that was coming into the space. I also shared an office with George Lane. He created stochastics, which, as you guys know now, is an oscillator. I thought that was the holy grail. So I kept going. I went down all these things, and it was because there was no documentation on most of this stuff. Most of it was Wells Wilder, but that's not important. I just want to show you the trade. So we'll come back to that. But if anybody's interested in Trader Lab, there's no cost for it and not a Zippo. And as long as it's available, you might want to take advantage of it. So we know about the longs. We know about the first long. We know about the first metric. Now, this morning, we had reports. I believe it was 8:45 was final PMI, and then we had ISM at 9A. What might happen? Let's use our thinking caps again here. If you have a key report coming out, are there going to be traders taking substantial positions? Maybe, maybe not. What about the shorts that are in here? That's what we're betting, underline on. that the shorts are going to get squeezed, continue to get squeezed. But what happens in the meantime? Now, this comes down to time frame, if you will. How do you trade this? Now, let's get into microstructures. And again, if you were trading this long, and you can take it from, actually, the trade is here. So there, these are all longs in Trader Lab. This suggests this is too low. This is too low. This is the retail price. What did we find out? Too high, too low. If I cross this, what is it? Too low. Now, right here, you'd be long here. This is a more aggressive trade. Your stop would have to be under here. You could take a long there. This is another structured trade. What else is this? This is another structured trade. And the resistance is here. Where did this resistance come from? I'm going to show you. I'm just giving you ideas, guys. I'm not saying anything more about it because there's no right or wrong. This is the thing that's challenging for us. And this is, now, what I'm showing you is structure. It's nothing more than I'm showing you how to read participant behavior using order flow, but the primary chassis is happening out here. If you understand what it says, and this is the thing, what are indicators? All they are Google Translate. They're translators. That's fine. But what the indicator doesn't understand and has no way of comprehending is the condition of the market, that there's traders short from Friday, that we have sold out already, and that yesterday we tested the key price at the low of the day and rejected it. That sets everything up for today. Now, intraday, let's look at this. Now, this again is going to be a time frame oriented conversation. There are some traders in Trader Lab who will put a long on and they'll put their feet up, get their Barca lounger, and go for higher time frame targets, which at the moment is here. Not a recommendation, clueless. The other target was, where was it? Here, 83-ish. So, and that's posted. And by the way, the fact there's a target means nothing. What it means is it's something to reference, and how does the market behave in relation to these areas? They're not a level in this business is, I always think of it like horseshoes and hand grenades. It's an area based on previous potential behavior. So when we come back to these behaviors, same as when we came back to that behavior, we can anticipate a reaction. Now, it doesn't mean it will. Market could, could do whatever it does, right? So that's not the point. We can anticipate. That's why 83-ish, and then the stops above here. Remember, the market goes up to go down, goes down to go up, right? So you know that. Now, when you take the concept, the market goes up to go down, doesn't that apply to all time frames? Well, what happens here? I get my target. Now, this is order flow. Just going to show you a couple ideas. What happens here? This is absorption. This is a sweep. This is a sweep. Going to the moon, right? Why not? ETH high. So, okay. We see the book. We see the press of the liquidity. We have another sweep. This is the, I call it the warning Will Robinson moment. You guys ever, danger, warning Will Robinson is from Lost in Space. And that's where the robot would say to the boy, watch out. So this suggests the possibility right here that these sellers are absorbing the buyers. And if we can't push through, then we're going to counter rotate. So now this sets up possibilities. This is our support. This is our support. Why? Buyers, buyers. Too low, I move away. Too low, I move away. But what happens up here? Break low. Right here. You see here, let's go a little deeper. Just going to take you into some minutia. Hope you find this useful. None of these are trade recommendations. This is about structured trading. So right here, I'm seeing my sellers. That's wonderful. And, sellers are there. Buyers are here. You see this guy? Absorbed. Why didn't it go down? Well, I got a seller. Didn't go lower. I went higher. Buyers are above the seller. Even though there's seller, The buyers absorbed this seller, which is this iceberg. I come up here. I got another iceberg. I have sell stops coming off. Now, here's something I find always kind of interesting. I'm going to share it with you. It's the only thing. I don't use indicators. So what did I get out of those years? I mean, years of using indicators. Divergence. This is, I call stop divergence. It's very simple. This is the stop and iceberg detector. Now, I have no clue. 85 stop. Now, look, there's divergence here, you know, but my target is there. So it's not the same. Now I have a sweep. You see something different. Let's watch. Sellers are here. There they are. Buyers absorbed this. Why did it go up? There's buyers here. Buyers are above the sellers. Going up. What's here? Sellers. Buyers are there. Going north. Going to the moon, right? Sellers are now below the buyers here, below the buyer there, who was absorbed. So the sellers are there, the sellers are there, the buyers are here. The high volume in here is here. This is a fractal or shorter time frame. And what is it? This is the high volume. What happened at the overnight VPOC? That was the high volume. What is happening over here? This is the developing volume point of control, the current retail price. So too low, too low, too low, retail. And if I don't do one of these, and I do one of these, what is that? Isn't this volume now potentially too high? So what might that mean? I don't know. Let's see what it says. Language. And the buyers were here. I'm below the buyers. I'm testing. This is like a VPOC. It's the same as these, but shorter time frame. It suggests the potential underlined for counter rotation. And what is this? If this is too high, this is retail. Now, subject to your plan, let's talk about this. Now, this will make your eyes roll back in your head. What is your plan? Well, I'm not going to really get into my plan, except to tell you how you might use these things. If you're on these longs and you're going for these, they say the Hail Mary pass, that's a football term, American football, which means you throw it in the end zone, hope for the best. Then this is either a trade management opportunity or you're way outside, way far away from the noise, and you're not operating in this. You're just way out there and you're going for higher time frames. Or this is trade management, you're out because this is too high, and this is mean reversion. Break, too high, reversion, back to what? Higher time frame, reversion. This is an exit, subject to your plan, you have to vet it, or a short, back to there. Interesting, isn't it? And then where's below? What's below us? The longs have their stops under here. Opening, swing low. So how does that market work in all fractals and time frames? Market goes up to go down, goes down to go up. If I have longs in this leg, what might happen? Let's look. I don't know. By the way, clueless. Where's our resistance? So it's a trade management opportunity. Hasta la vista, get the coupon, go to the buffet, have a cocktail. Or, subject to your plan, a short from there to there. What else is this? A potential long from here to there. Or nothing. But let's look at the structure. If you isolate these behaviors, you can begin to define structure. Does this look interesting to you? Let's watch. What is this? Too low. What is this? VPOC migration. I was starting to tell you, I made this up many years ago. I mean, I started observing it and I'm going, oh, what's that? Why does it do that? And then when I say started to, there's so many things that I've jettisoned over the years, probably 95, 97% of it. Let's look at the structure. What do we know? I'm not paying that in the store. This is like your convenience store. Let's think different time frames. Well, let's just think shopping. Let's get over all this difficult, confusing stuff. Let's keep it simple. Why make this any more complex? It doesn't need to be. Too high. I'm not paying that. Yeah, but it's on sale. Too high. It's on sale. Too high. VPOC migration. Too high, too low. Break low. Too low. Long. So all these are structured trades if you vet them. Now there's more complexity here. And your job in Trader Lab is just to take one and understand it like the back of your hand. Like it's just your dance partner. You can get in a flow with it. So it's a exit or a short to there, to there, to there, a long from there. If you think the trend is up, you're only taking longs. Where are you going? There, there. This shifts up. What is the behavior? There. What happened here? We shifted up. What was the behavior? There. What happens here? If this is too high, what's too low? Now, one of our traders in Trader Lab posted a trade he took and he got stopped out here. And he got very frustrated. Of course. Why not? But here's the thing that's important. You have to think like a retail trader, but not act like one. Write that down if you're visiting. Why? What do we know? Let's look at this. This is so sweet. What do retail traders do? They all do the same thing. Think like a retail trader, just don't act like one. What's under here? Stops, stops. This price is too low. This price is too high. Everybody tracking so far? Why is this a bad place, potentially, to put your stop? Why? Is everybody with me? Why do you think it's a problematic place to put your stop? Anybody? How about Trader Lab? How about you guys in YouTube? Any reason why this is not? This is what retail traders do. Swing lows, swing lows. What do I know here? You see this delta? These are market orders. Sell stops. By the way, I was going to tell you about stop divergence. I'm trying to go too fast. Up here, you'll notice there's buy stops coming out. This is the stop and iceberg detector. What happens over here? You look at this. I just have to cover this because I started to. It's only 3 stops. So if I have buy stops here, and then I get buyers, who are the buyers? Are they initiators or are they being squeezed out? Isn't that a different buyer? Isn't a buy stop different than a buyer who's initiative? A buy stop is a squeeze and it's an exit, of course, and it shows up in delta as a market order. But if it's only stops and I see the sellers and I don't have new buyers above here, then what? Then there. Now, what else do I know? When I came down here, my buyers are here, my buyers are there. There's the absorption. Sell stops. Same. What else do I know? Let's go a little further. Just showing you some ideas. You can, you have to vet all of these ideas. What happened here? Well, 335 stops. Thanks for playing. You get a coupon to the buffet. 6, 1. Icebergs, icebergs, icebergs. So absorption, okay? Why does the market go down when you have red delta, selling delta? Because there's a buyer. Not a buyer sell, quote, indicator. It's an indication of aggressor. And market orders, whether they're stops or initiators, show up as delta. So what does it mean? What's here? Absorption. My buyers. What else is this? Too low. And what's too high? It's up above, right? Okay. Sellers are here. Now let's watch again. Watch the behavior. Right here, buyers are here. Now, next thing, what is here? By the way, this sweep also sets up a long. I missed that for you. And all this is like before what? How long we've been going here? 15 minutes. These are all structured trades. Resistance, resistance. Where's the stops? Under the swings. That's the stops. Now, this trader I'm referring to in Trader Lab, and I appreciate everyone in Trader Lab who asks questions. The way you grow is to overcome the need to look right, to be smart. If we don't develop humility in this business, you'll never have it. Ego has no place here. Absolutely no place. That's all a psychological impediment. Under here, we have our stops from the traders in these swings. We also have stops under the opening swing low, which is down below us, down at 3.5, okay? So that's what we know. So if I'm in this trade, I'm just telling you me, just like you, I've gotten stopped out so many times that I can't count, right? But I know what the language of the market. What I know is this is too low, and that this is the retail price, and I know there's stops under here. Okay, so that's what I know, and it's a full session VWAP. I also know retail, and this is too high. Retail traders keep their stops at VWAP mid. That's retail trader behavior. Think like one, don't act like one. Stops here. So when I get this, and I get a trigger, I can get long again. Same thing. This is called mean reversion. And I'm trading multiple reversion processes. Now let me show you the long again. Where is it? I'm going to draw a little line for you. What was this? Too low. Now this is a stop. You guys say, oh, I got picked off. Here's a question for this astute group of traders. Is it possible you did not get picked off? What you did is you put your stop with everybody else's. And if the market counter rotates, where's the stops? Under the last swing. Where's the stops here? Over this. Is the market going up or down? Well, we think it's going up. Which side do you trade from? You can trade from either side. This is too low. Here's your buyers. It ran away. If you're astute, you get long here. By the time you're conscious and now it's here, then where was it too low? I'm going to draw a little line for you. Help you see the structure. What is this? Buyers are here. Buyers are there. Sellers are here. And the way you match these up, we can put this right here, is this. Retail, too high, too low. So the way to think about this, you break out. Now this is our resistance, up here and over here. But the trend, theoretically, we want to be long. So if you're only taking longs, and here it runs away. What do we know about here? Micro high volume, right there, right there. Next fractal up or time frame, retail, right there. So I've got retail, and the next structure down. So if I want to get long, I could be getting long in here, and I need to get there and through there. Let's watch. See where it is? Now, these are structured trades. Again, I'm not saying this is good. I have no opinion. It works for me. And it's not that you take all these trades. In order to be able to do this, you need one trade. And the thing about this is knowing some traders, like I say, are going to maybe take a trade here and take a nap. Other traders are going to actively manage this trade and come back to high volume, which is up here. So if this is too low, then you're looking to squeeze out these guys that are short in this leg. Okay? If it's too high, you're going to break. It's as simple as that. There's nothing more to it. Let's go down in another structure. This right here, going up, going here. This is your area. The high volume is there. Now, I did mention in Trader Lab I was taking some shorts, and everybody's going, why are you taking shorts? And it's not what I do. I take stops. Nobody's got a monopoly on anything. I'm trading a specific time frame that works for me. So I'm kind of slipping and sliding with it. That's just kind of what I do. I'm not saying it's a good idea, by the way. It's just what I do. Now, there's a couple ways you can put this together. The buyers are here. This, no bueno, no big deal. Come up here. This is where our resistance is. It is this volume out here at the time. So for me, there's a couple ways to work this. This is an exit or a short. Break, outside edge, test, resistance, break low, then it's looking to come across the range. I know that I have stops under here, and the market can come back and check this and take out the opening swing low. It's a trade I take. I perceive it as counter trend. I don't have an issue with it. Now, the next target on this is the value area high. And the statistic is about a 55% probability. But the nature of the market is to check the previous day's range, which is this. And if we get below this, remember what this is, the retail price from the ETH. It's our opening swing low, right? If I break below it, what might happen? If now this is too high, look at the symmetry. What is too high? What's too low? This now becomes too high. I can sell this to there. I mean, I'm not saying this is a good idea. I'm just saying it's things I do. And it doesn't matter. And another little piece for you. I know I'm probably making you nuts. We took the ETH high, right? Let's look at our statistics again. And you have to vet these. There's only a 20% probability we take out both the ETH high and low. If I know that, which doesn't mean anything, this is my target because the probability of getting here is low. And we could go there, but the probability is 38%. For me, not on the radar. And it doesn't mean it won't do it. What it means for me is I'm just trading into the stops that are under the IB 30, wherever it went. Under there. So this is the opening swing low into the stops, pull back the overnight volume point of control. And it's just whatever it is. It's up to your plan. Me, I trade this stuff, but I'm not saying it's a good idea. Just something I'm used to doing. So this now is too low. So now let's come back. Now we have something called the IB. Let me try to show this to you. Now we have the IB high. Remember the statistic of taking out either the first hour's high or low is about a 98% probability, and taking out the IB high 62%. So I have a 98% probability of taking out the first hour's high or low, and we're leaning north, and you might say the trend is north, so everything is go to the north side. So you can use the short counter rotations for exits, and then you can look at long structures at locations subject to a vetted plan for getting in realigning. And I can't tell you what the right thing to do is because it doesn't matter what's right for you. I can tell you what's right for me. And it's not really fair to tell you what I do in the sense because I've had a lot more time than you to work on this and try to, get something that fits my psychology. Now, I'm going to show you some things. And of course, it's all with the benefit of hindsight. So let's just keep it real. Important location, right? So this is the target coming down. Coming down, going to zero, right? Let's watch. I'm going to show you something micro. Now, I don't find a lot of this actionable initially, but I'm continually reading this auction. In other words, I got my sellers here. These buyers were absorbed. I got my buyers here. So this is your consolidation. And basically auctions are consolidations because that's all it is. It's, I'm not paying that. Yeah, but it's on sale. Chop, chop, chop. And inside of this, we can look at the volume. So here, there's microstructure right there. Now, I don't know what to do with that. I see it and I go, I don't know. You know, you ever say, I don't know? I'm always saying, I don't know. I'm always also saying the best you have in this is maybe. Maybe this is too low. Maybe this is too high. Maybe this is too high. I got sellers there. There's the icebergs. I got buyers here, sellers there. Volume right now, let me bring it back, is there. Sellers, buyers. I don't know. Going lower, right? Who knows? I don't know. Microstructure. So it can do the following. If that's too high, I break below here. Hasta la vista. They pull, going to zero. Sellers, buyers. Micro high volume. Now here's the thing. It breaks low or it breaks high. And I couldn't tell you which one. I have no idea. It's not my job. Breaks high. So what happens here? Maybe this microstructure is too low. Right there. Maybe this microstructure is too high. I take it out. What does that tell me? Maybe too low. Absorption. The buyers are still here. Where's my sellers? Up here. So sellers are there. Buyers are here. Buyers are here. Come up above these sellers. Find too high. No clue. Come down here. Looks like it's going to zero. Buyers are still here. When I put a trade on, just so you know, I do not put my stop here. Why? Because there are stops there. Your stop would be there. My stop would be there. Think like a retail trader. Don't act like one. For me, and it's not a recommendation, I have to vet this, my stop never goes here. It goes outside because the market has to work to get to me. What happens if we just counter rotate and we get stops? Who's going to be the buyer? Might it be these guys? If they think this is a great deal to buy S&Ps here, and we come back to the price on stops, which are market orders, and these are limit orders, might they just scoop them up? And one other little thing I'm going to try to show you if I can. Let's see if I can show it to you. It's here. I don't know. See what we did? There was 192 stops here, and then we took this out and just grabbed 67. These buyers are here. They're still here. So that, in my opinion, is why you don't want to put your stops with the rest of the herd, because that's like lemmings. You don't want to run off the cliff with the lemmings. So too low. Here's the volume. Too low. It's like a VPOC. Sellers, see how it reacts? Where's my buyers? Where's my outside edge? It's now, and this will make you nutty. I'm just showing you some structure. It's not necessarily actionable, but what I do is when I'm looking at this, I'm going, well, okay, that's an auction. That was the price. I'm now moving away from it. I now know there's too low. But again, it was already here. But if my stop is there, I get picked off. This is why we're victims of them. You know what they did to us? Have you ever thought maybe we do it to ourselves? I'm going to show you some other structured trades. And where's our resistance, right? Coming across. Once you come across, then you've got the mid, the VWAP for scaling. And since we're in a market that we suspect is going higher, it is north. Now, all this was resistance. You notice how the market reacts at these levels? And resistance, old concept, can become what? Support. Now, there's more. And I want to get caught up here, guys. You have questions, post them. I'll come up for oxygen. I'm showing you structured trades. The reason I show them to you is that you understand you can learn how to trade. All I'm doing is what I've shared in the Trader Lab. Now, what I'm also showing you is not what you need to do, have to do, or should do. I'm showing you how you can organize the structure so you can interpret behavior. I'm doing this without indicators. I'm using order flow and the auction. The auction is really what the market is all about. It's what's too high, what's too low, and it does it at all time frames. So if I know this was too high, and I now have my first hour's high, and the trend we perceive is up based on everything I've already discussed, then it is longs. Now, let's look. How do I get long? Great question. Well, at 9:30, the IB high is locked in. That's the first hour's high. Which is here, okay? So first hour's high. When I break above it, it sets up a structured trade in the Trader Lab called the IB continuation trade. Now, why would you take a long here? Because the market is short and we have 83 and change as a high volume target up above. So for me, the long here is to there. And then whatever happens, happens. You know, it's kind of like, okay, then what? Let me show you two ways to enter the IB continuation trade. And these are in the 60 PDFs in the Trader Lab. You can download those. There's no cost. There's a library of webinars and, of course, the Trader Lab community. But it's a group of serious traders. This is about business, guys. So, you know, it's not romper room. So sweep here suggests rotation up, just as the sweep there suggested the rotation down. So rotation down, buy sweep, rotation down, buy sweep here, rotation down. See it? I'm just showing you some sweeps, how you can use this. Sweep down here, rotation up. Sweep there, rotation up. Up, okay? IB, first hour. IB continuation, chop, 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 break high. This is a structured trigger. Let me show you the high volume. You can just see how this fits. Sweep coming down suggests north. You got to be aware of this thing. Where's your support? Isn't it there? Right? This is all very structured. What does this say? Up. What does this say? Up. What's this thing? Better get scaled. Where are we trying to go? North. IB continuation trade. Sweep. What does it say? North. To there. And then helmet. Trade management, or you're out of the trade, depending how you manage your trades. And I see we're back in real time. Okay, I'm going to look at your questions. Let me just throw this up on here. Now, and this is not a recommendation, the obstacle is this. This is now moving into a balance, which is a mean reversion outside in trade. Not a recommendation. The key to this now is to be looking out in this area and even back to here. So just an area for longs back to here and potentially to test a high a day. Not a recommendation. Just getting that out. How we doing? Hope you're getting something out of this. Please give a like. How you guys doing? Sorry it took so long of this. I'm just trying to get through this. You could kind of see method. You know, trading is method, process, vetting, edge, and understanding the condition of the market. The condition of the market is happening in multiple time frames. So as a day trader, I can doing whatever in this. My next trade, and I'm very specifically want to say, not a recommendation, because anything can change at any moment, is to get long for this. So if I can come outside somewhere, part of the thrill, and the somewhere is out here, somewhere. Now, if I fall out, my next support is going to be in this area. So I'm going to be looking in this area to come there. And then potentially out the top or not. That part, clueless, you know, right? I always like to say I'm clueless. And I have to say that to you because I'm acknowledging randomness. I'm not saying, I'm not ignorant. But if I think I know what's going to happen, I'm already psychologically in trouble. I need to be in a mental state of, I don't know. The best I have is maybe. Yeah, maybe it'll do this. Maybe it'll do that. Maybe it'll come out here. And I got to look left. When you're trading mean reversion, you must look left. Where are the stops? Remember what I talked about. What do retail traders do? Their stops are here and here. So if I get long, I personally, and this is not a recommendation, you have to vet this. I cannot get long here. And it can come here because that's the trade. Why can't I get long here? I see the buyers. I have a rotation. Tom, get long, get long. You're going to miss it. Oh, FOMO. What do I know? Stops, stops, stops. If I get the stops out and I come outside and I get absorption and a trigger, that's what I know. The possibility is, and this is called mean reversion. I talk about mean reversion all the time because it's actually the condition of the market most of the time. That's it. So if the market, that means retracing to high volume in all fractals or time frames. So I don't have a trade here. My trade, and I'm only talking me, and it's definitely not a recommendation. And the market never has to do this. You have to understand, it never has to get out here. It can just keep going. Now, how do I measure myself as a trader? The P&L takes care of itself if I follow my plan. The trades are random. The outcome is random. Anything can happen at any time. A tweet, somebody trips over the cord at the CME, right? Anything can happen. So that is not my job. My job is alignment and edge. The trade is outside to here. You're seeing the auction. For my trade, I need these guys to get taken out. Now, we might have taken them out here. I really can't. Oh. No, we didn't. So I don't have a trade here. That's me. You may have the best trade of the century. I have no idea. And here's the other thing I know. Let's assume the market never takes the stops because this is the scale. And here's the range. You need the range. If this doesn't qualify, you still don't have a trade. It's not what the market might do. Market, this is the trade to go outside back here. If it doesn't qualify, in other words, how much range do I need from entry to getting risk neutral, which is ahead of this by 1 or 2 ticks, preferably 2, then you don't have a qualified, your trade is not qualified, your job's to wait. If it comes outside and now I have the range, I get the stops out and I get a trigger, then I'm coming back here and I'm looking to come out the top. It's the plan, guys. It's not any random rotation. If the plan has an edge, your job's to trade the edge, not FOMO. Oh, it's going to go, it's going to do. Yeah, it might, because this is the behavior. But it has to have location. Remember, location, location, location. Think real estate. You guys have questions? By the way, if you guys are visiting in YouTube, please give a like. Always good to be liked. And the other thing is, if you have further questions, come to Trader Lab. Use the link in the bottom of YouTube. You won't be solicited, harassed, or otherwise abused. The market can take care of that for you. You don't need anybody to do that. There's no cost for Trader Lab, and it's available to everyone. It doesn't matter how long you've been trading. I think the sooner you come to Trader Lab, the less brain damage you'll be subject to. That's just an opinion because I wish there was a Trader Lab when I started. When I started, there weren't all floor traders. All my buddies were floor traders. So it was kind of an anomaly for me. There was nobody, and everything was new. This is before the internet, before PCs. It was 1980. So this is like in the Stone Age. It's charts by hand, So different, of course. So you notice what's happening here? Let's watch it. And this is not a trade recommendation. Why would I, in my plan, not take a trade there? because the market's job is to look for too low, and it also does business. And it does business where where the stops are, because those are going to be sellers. If we get our sellers, what about my buyers? Now let's look at the microstructure. Now I don't have range, okay? So I still don't have anything to do, but let's look at it conceptually. What we're trying to do is get back here, but from an outside edge. So if I'm building a trade plan, then this is a trade for me, except it doesn't qualify. Can you handle that? Or is the lunatic under the hood, Hyde, you're going to be compulsed to trade where you have no edge? There is no edge here because there's no range. So if it comes further out, what else do I know? If I come further out, then I have another structured trade called VWAP or mid to VPOC. That one fits, but I would have to fall out of this. And right now, this is the area I'm auctioning. So this is too low. This is too low. This is too low. There's the retail price. If I fall out here, I can look here, and I can look down here, and I can look over here. So I have locations to observe behavior, and I take stops, so we got to get over it. So let's observe. Questions, guys, post them. Duzman is asking in Trader Lab, for outside-in trades, how do you personally enter? What would my trigger? I use microstructure. I always do the same thing. I'm just going to look at this like here. Micro high volume is happening right in here. So the volume is there. This is too high up here. So I'm using the chart volume profile. It's only showing me the volume on this chart. So whatever I want to pull in, I can see. Too low, too high, micro retail. The same as what's over there. And I'm falling out of it. Now, too high, too low, retail. Microstructure. I'm getting a bit advanced on you. It will make you crazy. All I'm doing is slicing the onion. So think of it that way. So in this developing time frame, this is the outside edge. Oh, it's on sale. Retail. Too high. What's happening in here? This is retail. Too high. Too low. Stops are coming out. Now I'm looking at microstructure. So I go down in structure at a location. I have to have the range. Now, a trigger is the same thing, but in more shorter time frame. So right now I see my sellers. My sellers are here. My buyers are there. My sellers are under my buyers. Sellers are in control in this little structure. I have icebergs buying here and sell stops coming out. I got stop divergence right here. I have micro high volume here. It looks like we have a trigger coming up, right? But I have no range. So I don't have, unless I can enter with a scalpel, it sets that up, you see. But it's not qualified, so I don't take it. But that's kind of what your trigger might look like right there. Buyers are here. Sellers are there. There's your break high. Your micro volume is right in here. So it needs to hold this area and this to get to there. That's about it. Doesn't mean it'll do it, but that's kind of the thing. Now, if I'm going to put a trade on, I got to have the range. Let's see what it does. Anyway, Duzman, I hope that kind of helps you a little bit with that. Antoine, if your POC on Bookmap is 6470, you got to make sure you got the reset time correct. It should be at time, not session start or anything else, at time, and then your local time for RTH open. Because you might have that time setting off. So this is mean reversion. Now remember, the whole thing about this is understanding how the market works. It's on sale, retail. If the price is too low, what is the market going to do? Potentially here. So if this was out here, this is long for me, right? And then it's trying to get back here, underline the word try. If I get here, and so let's go back to the concept of the trade. Don't take it here. Why? Stops. Get the stops. What else do you see? 153. They get a coupon to the buffet. Then what? 5. Stop divergence. Buying iceberg, stops out. If I get the sellers out and the buyers from this, or over there, I should say, will come in if they perceive this still as a opportunity, then it sets up a long, and then we're trying to go there. It's not a trade recommendation. All trades take stops. I take them all day, and I'm about as ecstatic about it as you, and I just accept it as overhead and cost of production. Casinos seem to do okay. They're not personally attached to the outcome. We will never be detached, but we have to train ourselves to accept that we're in an environment of randomness. The only way you measure yourself in this business is an edge, and did you follow the plan that creates the edge? Anything you deviate from there is an error. I always like to talk about the error cost calculator, something I created for myself too many years ago to even remember, and I quantified my errors. Skipping a trade, moving a stop, bailing out, impulsing in, FOMO. I can't even tell you. Making trades up. Crazy. And I put them together. You may be a profitable trader already, but if you don't quantify it, and I'm going to tell you, putting a little note in your journal, even if hopefully you keep one, and then turning the page and never looking at it is not doing you any good. Quantify what that costs you. That is something you can control. We cannot control whether this long is going to get there before it falls out the bottom. You can control when you trade, where you trade, and you still are only working with an edge, and we all take stops. Do you understand how the market works? If not, come to Trader Lab. I do this without indicators. And the only reason I've done that is because the indicators were the problem for me, not the solution. And I'm not saying you can't use them, but if you can't understand why this might happen, what is your indicator telling you? I don't even know. I couldn't tell you. If you understand how the market works, if you understand why stops would be under the swing and why you wouldn't get long, you would wait for that to come here. And then if this is qualified for you, up to you. If you can enter. Now, what's the trigger? I was getting the question. Let me show you. Guzman, take a look. What do we know? What do we know? This should be right there. Not important. If I get my stops out and I get my break high, Guzman, that's your trigger. There's my test. I could have a limit order here and a stop a couple ticks under here, scale there, runner. And the next target, subject to, is ahead of this volume up here, and then helmet. Is everybody tracking? This is Trader Lab. Hopefully you're getting something out of this. Exactly, Duzman, you got it. How are we doing in YouTube? You guys following? Please give a like if you find this interesting. If you're interested in the Trader Lab, there's no cost. As you guys know a little bit about me, I've been doing this 46 years, both professionally and out here with you. This is day trading. The beauty of day trading is you have to find your groove. Is this your thing, trading there to there and then managing a runner? Because we have what? Fuel sitting up here. Stops above what? All of this is before the market even opens. The stops are there. So if I know yesterday this is too low, low of the day, everything other than trading rotations, which is subject to a trade plan, is longs. unless, you do something else. But for developing traders, and by the way, we're all developing traders, you never have to take a short. What you could be doing in this condition, and this is specific to the current condition, is using shorts for exits, trade management, and reestablishing longs. Or if you are long, you are outside of the noise, which means a larger risk, and you're trading for a larger reward. So this was my target out here, 83 and a quarter, and then this is the next one up. And I say it's my target. It's not based on me. It's based on the market behavior and the mechanics. This was too high. It was a fair price. Now we have a lower fair price. Think of a VHVN that I'm showing you. Same concept, different time frame. That's too high. Then we can come back here and check it. This is the retail price. So I come here to here. If this is now still too high, then I come back here. If it's not, I can go on to the stops. Why? Buy stops are here. Buy stops are here. Where were the buy stops? There. What did we do yesterday? Too low. Buy stops. Hasta la vista. Target yesterday here. Didn't get there. Got it today. C'est la guerre. Next target. Hunt. Trading. Is this impossible? No. Is it random? Yes. You want to learn to trade? Come to Trader Lab. Will you be successful? No idea. Are you willing to do the work? Roll your sleeves up. No plug and play. No quick fix. You have to determine, are you going to be a professional? Are you going to make the investment? Consider what it takes to be a high performer in any endeavor. Anything. I always equate this kind of to dancing, playing a musical instrument, being a professional, like sports. If you want to play at the highest levels, what does it take? Are you a walk-on in the NFL? Are you a walk-on in the NBA? Or do you start with a basic process, develop discipline, do replays, watch films, get coached, do it over and over and over again until it's no longer conscious. You anticipate it, you dance, you flow. You need to get into a flow state. A flow state comes from unconscious competence. You are now, consider, if you're not profitable, that you are incompetent. Incompetent means you don't have trading competency. That's all it is. We all have random behaviors and it masquerades as competency. Gamblers win. Are they competent? Yes. Competent at gambling, not competent at winning in a sustainable way. That's the difference. That's where you have to say, wait a minute. I figured it out for myself, and I'll tell you, it took too many years. Too many random winning trades, too many profitable trades, too many profitable weeks, too many profitable months, but still the ball overall would move in the wrong direction. And I kept trying to fix it. It was my process that was defective. I didn't know it. I tried to solve it with trading systems. And I thought that was the answer because, of course, I researched trading systems. I also always ask myself the question, and you should ask yourself this. If you have a software product, a high-level software product, doesn't matter which one it is. I use Investor RT. You could use anything you want. Traders use Tradeovate, whatever. Doesn't matter. They all have about 150 or so canned indicators in them. Here's the question for this astute group of traders. Why are there 150? Here's why, in my opinion. They all work randomly. So our nature is to see something work and then try to make it better. It's very logical. But why do you need 150? Why does Fibonacci work sometimes? Why does Elliott wave work sometimes? Why does a pitchfork work sometimes? Why does an oscillator work sometimes? Or RSI or Bollinger Bands or Keltner channels or anchored VWAPs, and then they don't work. So we try to make them better. Isn't it logical? I understand it. You understand it. Why do we do it? We're looking for certainty. We're looking to squeeze the risk out. I get it. It's logical. But what about if that's the problem and not the solution? That's why I coined the phrase Trader Groundhog Day. It was about me waking up in the same place, no matter how hard I worked, how many replays I did, how much looking back and tuning and tweaking and curve fitting. And, this is not a car with an old-fashioned carburetor where you put the screwdriver in there and you tune it a little bit. This is not what trading is. Trading, every moment is unique. So anything can happen at any time. But the magic or the beauty of this is to understand what trading really is. This is what trading really is, the auction, how it behaves, why. And that's why what I share here in the stream and is also available to you in TraderLab. It's because I have a soft spot for traders. I only wish when I started that there was off-floor traders. I was an anomaly. I didn't know anybody. And back then, if somebody even knew something, whether it was actually viable or not, they wouldn't even talk to you about it. It was like everybody was holding their cards. Oh, I'm not going to tell you how I do that. Well, I tell you everything I know because you don't need to know a lot. You just need to know how the market works, why it does what it does, where it might do it, and then know where this shows up, what you will do, and what you need to qualify the trade to get there. And remember, where are we trying to go with this thing? Well, there to there, and then it's a runner with trade management. And if you don't move your stop, you'd scratch the trade, maybe get a burger, or you have a trade management process. It's a different element. So what do we know here? Right here is too high. This might be too low. If I can come across and clear this, I can continue. It's not a recommendation. If I fall outside of this, I can come back here. Let's see what it does. And again, it's not a recommendation. I'm showing you microstructure. Also, I got liquidity up here. I've got this pressing. So the question becomes, this press, is this an algo and they're going to push the market into the buying, or are they just going to keep coming down and press the market? Now, I can't tell you what it'll do. It's not my job. What I do know is if I can't come back above here, I'm going down. That's what I know. My outside edge is right here. So let's just watch it. It has to clear there to continue. If not, it can just come back here and that trade would be wherever. And that's all subject to your plan and trade management. When you start, you don't need to answer these questions. You need to solve this question. Because the goal, the first metric, is to get risk neutral. What is the probability if you took this long to get scaled? If it's a positive expectancy, now you've laid a foundation for where to trade and risk management. Trade management is a different conversation that'll be specific to you in the time frame you operate in. This trade is suggesting is coming back here. And if we come outside, all it does is set up another potential long to come back here. So this is still rotational trading, mean reversion. Now let's watch out here. I've got 2 minutes left. Do you have any final questions? Don't forget to leave a like. Use the link in the bottom of YouTube if you're inclined, if you want to visit the TraderLab community. Remember, it's about the business of trading. It's not romper room. So if you're interested in business, you're all invited. And if you're kind of looking just to hang out, probably not for you. Let me show you what the TraderLab looks like. This is the TraderLab community. There's a lot going on in here, a lot of research, data mining. The auction process is not complicated. It's really just shopping. If you know how to shop, you already have a lot of this built in. You just have to know how to interpret it in this environment. This is our library of webinars. This one has about 34 or 33,000 views. You might want to check it out. It's about an hour. Stop gambling, start winning. You might want to lean that way. Meet the TraderLab. This is an advanced trader methodology, but advanced doesn't mean complicated. It's actually simple. It is random, of course, and everything is. Use the link in the bottom of YouTube. Ned, thanks for curating this for us and for all the participants in TraderLab. Appreciate you guys visiting the lab today. If you don't have a plan and a statistical edge, you might want to use that link in the bottom of YouTube. You just have to verify your Discord username so it keeps the spam-alators out. I'm sure you can appreciate that. Have a great day. Don't forget to like. Appreciate you visiting Trader Lab, and I look forward to seeing you guys tomorrow. I hope you guys in Discord, you can see structure and how this might work. Please give a like in Discord. Let me know you'll get something from this effort.